Hey everyone, welcome to another episode of Adam Talks, a podcast that takes an alternative look at retirement. This is Adam Bergman, founder and CEO of IRA Financial. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hi everyone, and welcome to another episode of Adam Talks. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's episode, they're here. 2022 new IRA and 401k contribution limits. Should the celebration begin? Yeah, I think so. Not a full-blown bash, but there is definitely some room for some champagne. I don't know about the whole bottle of Dom Perignon, but couple glasses of champagne definitely to celebrate the higher maximum contribution limits for some IRAs and 401ks. Let's start with IRAs. I guess you can say boo. No increased contributions for IRAs and Roth IRAs in 2022. They remain at $6,000 if you're under 50 and $7,000 if you're over 50. Now, one caveat to that is currently the reconciliation bill is still subject to revisions, so it has not been passed, even though the infrastructure bill has recently been passed. There are several IRA provisions in there that could impact your ability to make Roth contributions by eliminating the backdoor Roth IRA if you make more than $208,000 in 2021, and that limit is going to go up as well in 2022. The phase out is going to go all the way to 208, and as I mentioned in 2021 is going up to 214. So there is an increase, but if you make more than that 214 amount in 2022, you're not going to be able to do a Roth, and certain provisions in the tax bill will eliminate the ability to do a backdoor Roth IRA, as well as a mega backdoor 401k, which does not have any income limitations, but this provision seeks to eliminate the ability in a 401k to contribute the maximum in after tax and then convert it to Roth. So just one thing to keep in mind, that the bill is not passed, so there is still an opportunity that these IRA provisions may not make it into a final bill, but as of today, and I'm filming this / recording this on Monday, November 8th. So a couple days before this podcast will drop on the Wednesday, but more likely than not, what I'm told is that no bill will get passed till at least the next few weeks. So we shall learn more. But as of now, boo, IRA contributions are not going up, which is quite surprising considering the potential for inflation, well, I wouldn't even say the potential, considering that inflation is here. I read an article in the New York Post, I think this Sunday, that a slice of pizza in New York City has gone up like almost 50% in the last year. So it's not just for the wealthy, just, everyone is feeling the cost increase from food and obviously from a supply chain logjam. So I'm surprised the IRA contributions didn't go up. I expected them to go up at least $500 to $1,000. They did in the solo 401k / 401k. So let's move from the IRA, traditional and Roth, to the solo K / regular 401k. If you have a solo K or you have a full-time job or a job that offers a 401k, the 2021 employee deferral was $19,500. The new maximum is $20,500 in 2022. So it went up $1,000. And if you're over 50, the 2021 max was $26,000. The new max in 2022 is $27,000. So you got an extra $1,000 of employee deferrals, which is great. Okay. In 2021, the maximum you can contribute to a 401k, generally a solo K, because you're not going to be able to reach these maximums in a regular 401k, where you're just an employee, non-owner, was $58,000 in 2021. The new maximum, $61,000. So it went up $3,000 total max. So let's take an example of the solo 401k. You're under 50, you're going to do $20,500, and then you're going to be able to do the difference, $61,000 minus the $20,500. So the $39,500, that can be in pre-tax as an employer contribution, so long as you have enough income. and that's generally 20% of your comp if you're a Schedule C, single member LLC, 25% if you're a W-2. So you can go all the way up to 61K. 2021 was 58, so that's a nice bonus. If you're over 50, the 2021 max was 64,500. The 2022 max is 67,500. So a nice $3,000 increase as well. So really good stuff. I think we could celebrate if you have a solo 401k, unlike an IRA or a Roth IRA where you don't get the advantage of higher contribution limits, which again, kind of disappointing. Boo. But for the solo 401k/401k, the employee deferrals are going up $1,000 and $3,000 in the aggregate, whether you're 50 or over 50, which is yay. Happy about that. Good stuff. Hopefully everyone's able to take advantage of that. Let's move to the SEP IRA. 2021 SEP IRA contribution max is $58,000. Remember, a SEP IRA is a profit sharing plan. It's 20% of your comp if you're a single member LLC or a sole proprietorship, and 25% if you're a W-2 or guaranteed payment on a partnership. The new max is $61,000 for 2022. So it went up $3,000, which is great. Simple IRAs. For those who have simple IRAs, 2021 max is $13,500. 2022 max is $14,000. So good stuff there as well. I think we could celebrate on the SEP side, the simple side, and the 401k side. Unfortunately, for most of us, traditional and Roth IRAs, there's over 60 million IRAs out there. So kind of a boo where we're not able to put away a little bit more into our IRAs, unfortunately. So just to recap, the solo K is going up $1,000 from $19,500 to $20,500. The 26, if you're over 50, is now $27,000. The max you can put away when you include the employee deferral and the profit sharing was 58 in 2021. Now it's 61,000 in 2022. If you're over 50, the maximum aggregate is 64,500 was in 2021. The new maximum in 2022 is 67,500. Good stuff there. The SEP IRA again is up from 58 to 61,000, and the simple IRA is up from 13,500 to 14,000. If you're doing, well, assuming the backdoor Roth IRA provisions are not in a final bill and we can still do them, you will be able to do Roth contributions in any event. But if the backdoor Roth IRA provision is eliminated, now in 2022 you make more than $214,000. The 21 limit was $208,000 if you're married, filed jointly. You're not going to be able to ever get money into a Roth other than doing a conversion. So just something to consider. Some other things here I wanted to mention. If you have access to a 401k plan and you're making IRA contributions, the income phase out is from 109 to 129 for 2022, which is up from 105 to 125. And if you're married, filed jointly, it's up from the 198 and 208, which I mentioned, to 204 and 214. So you have some additional room to make contributions, tax deductible contributions to an IRA, assuming you have access to a 401k at work. Those income phase outs are something to keep in mind. Again, the Roth phase outs I mentioned as well. The 208 goes to the 214 if you're married, filed jointly. Defined benefit plans, which I don't talk about as much as I should, even though I own 2 pension administration companies. There's a big boost in DB plan limits. The max in 2021 was $230,000 a year. Yes, I'm saying that. $230,000, and actually you can go above that. If you do a combo cash balance plan, you potentially go up to $300,000. The 230 is now 245. So a pretty big jump from 21 to 22. Now, if you are self-employed or have a small business with very few employees and you have steady income, whether you're a consultant, architect, engineer, lawyer, accountant, and you want to put away a lot of money, like 200,000 plus, defined benefit plan / combo cash balance 401k plan is the best solution out there. If you're self-employed and you're okay with the 61,000 limit, or obviously the 67,500 limit if you're over 50, if that works for you, great. But if you want to put in more money into a retirement plan, then the combo cash balance / 401k is the ultimate solution. And that's something you should certainly consider. Not a lot of great companies do them. I'm lucky enough to have bought 2 pension companies that have been in business since the late 70s. So I think, in my estimation, and clearly I'm subjective, but I think for good reason, these are the 2 best shops in the country. They have thousands of clients from small to fire departments and police departments in the state of Florida and across the country. So if you want expertise, let me know. You can check out Pension Investors and give them a call, and they'll set you up with a combo cash balance / 401k plan, allow you to maximize contributions. The only thing to consider is you basically need to keep those plans open for at least 3 years. So, because again, it's a defined benefit. So you want to make sure that you have steady income for the next 3 to 5 years. And if so, and you're looking to put away 70,000 plus, and have a few employees and want to make sure that you're able to put away a big chunk of your salary, definitely consider the defined benefit plan / cash balance plan, the ultimate retirement plan. Otherwise, again, just one last thing, savers credit, again, which assuming it won't change, who knows, but the savers credit is going up. 68,000 for married couples in 2022. That's up from 66,000. And again, if you make more than that, you're not going to be able to take advantage of the savers credit. And if you're single, it's from 33 to 34,000. So those are the main points. The only downside, I guess, the only reason I'm not popping a bottle of Dom Perignon right now and sipping it is the IRA contributions and Roth contributions stayed static. They didn't go up. And I think they should have. I'm surprised considering the huge jump in contributions from employee deferrals, $1,000. The aggregate 401ks went up $3,000. SEP IRA went up $3,000. Simple IRA even went up $500, and obviously defined benefit plan went up $15,000. So kind of shocked that the IRA and Roth limits did not go up, considering the amount of cash that's been floating around the economy in the last couple of years. But I believe clearly from a policy standpoint, the IRS or Treasury do not want people taking more deductions, which is strange because they've increased the 401k contribution. So there'll be the ability to put away $1,000 more in a 401k. And considering a bunch of IRAs are Roth, I'm not sure it's a huge obstacle for the IRS in terms of generating revenues from a tax deduction standpoint. But that's what it is. It is what it is, right? Not much we can do about it. But those are the rules. And I'm actually doing an Adam Live on Wednesday. If you missed it, by the time this podcast dropped, you may have not been aware of it. You can go to our YouTube channel and definitely subscribe if you haven't already. There's some really good content that I'm super proud of. All these podcasts are available there as well, but we generally drop 4 to 5 videos a week, including one Adam Live I do each week, generally on Wednesdays at noon Eastern Standard Time. And if you miss it, don't worry. It's available and you can check it out anytime you want. But subscribing, you'll get notified when I go live, and then you can check it out if you're interested or bored, lying around or sitting around and just have some time on your hand. Then I think you'll enjoy it. I generally discuss I think important current events types topics in the retirement, tax, and investment space. And as a tax attorney, I try to dumb it down and keep it simple and really get to the point because I know everyone's busy during the day. Just want to go right to the heart of the matter, get you all the information you need so you can be well informed and ultimately a better investor, better retirement saver. So these are the new 2022 IRA and 401k contribution rules. Hopefully we all can take advantage of it and put away more money in our retirement accounts. So ultimately at the end of the day, we have more money for ourselves and our families when we need it. So thank you for listening. Really appreciate it. Appreciate you guys spending some time with me today. And I will look forward to talking to everyone again next week. Take care.